Okay, so let's keep going with our discussion of Chapter 1, which is basically an introduction to financial accounting. So we've got some little exercises we're going to do here. It says, this first one, true, false. An income statement is a summary of the revenues and expenses of a business as of a specific date. All right. So, a couple of lessons to be learned here. If we don't already know it, an income statement is a summary of a business's revenues and expenses for a period of time. So this last little bit here is referencing actually the balance sheet, not the income statement. So an income statement is a summary of the the revenues and expenses of a business for a period of time. So because we use this terminology at the end, we actually have a false statement here. Let's move on to the second one. This is a little bit more involved. I want you to understand what we're doing here on this. It says 4 financial statements are usually prepared for a business. Probably should say always. The statement of cash flows is prepared last. The retained earnings statement, or RES, the balance sheet, B, and the income statement, I, are prepared in a certain order to obtain information needed for the next statement. In what order are these 3 statements prepared? Okay. So, if we think, it's one thing to kind of memorize this. It's another thing to truly understand why the statements are prepared in a certain order. So, if we think about it, the whole key to answering this question is in retained earnings. Specifically, ending retained earnings. Okay, ending is what that says there. All right, so where would we find retained earnings? Which of the financial statements would we find it? Well, usually when we see retained earnings, it's going to be on the, where is it at? The balance sheet here. Okay, that's where most users of the financial statements are going to look to find ending retained earnings. So that would seem to indicate that the balance sheet is kind of the final resting spot for retained earnings. So whatever selection we're going to make here, it better end in the balance sheet, and there are 2 of them that do. These here. Okay, so now we have to choose between the income statement and the retained earnings statement, because we've kind of eliminated choices B and D here. As far as where does it all start? So if we think about the retained earnings statement, the retained earnings statement is net income or net loss for the period plus beginning retained earnings minus any dividends that are paid. Where does net income and net loss come from? It comes from the income statement. Okay, so that makes choice A our correct answer. So I want you to understand how this works. When we're talking about retained earnings, what we're saying is that net income flows to retained earnings. So we absolutely have to calculate net income or net loss first. If we don't do that, we can't do this step right here. So if we think about our retained earnings statement, it's beginning retained earnings plus net income for the period minus dividends, and that's going to equal ending retained earnings. Okay, and then we just simply transfer ending retained earnings over to the balance sheet. So A is our correct answer. Again, kind of a long and drawn out explanation there, but you really, if you're going to have any success in accounting at all, you need to understand not only the order of the financial statements, but exactly what is taking place to make that be the case. And if my explanation doesn't work for you, then find one that does, because you really do need to understand that. All right, we have another question here. It says the ending balance of the retained earnings account appears in. So where do we find that? Well, if you think about it, we kind of answered this question already, didn't we, in the previous question? The ending balance of retained earnings is going to be right here, C. It's going to be on the retained earnings statement. It's the final number on the retained earnings statement, and then we simply transfer that over to the balance sheet. So C is the correct answer. Hopefully you understand why this is the case too. All right, the next little deal we have here, they're actually wanting us to prepare an income statement, and I've actually put the little header there to save some time. But it says, the accountant for Scott Industries prepared the following list of account balances from the company's records for the year ended December 31. Use this information to answer the question that follows. There is no question, but it just gives you an order. It says prepare an income statement for Scott Industries. Okay, so I will tell you right now, you need to know, in order to be able to do this, you need to know which of these accounts are income statement accounts and which are not. Otherwise, you're going to try to put everything on there and you're going to have a jumbled up mess. So it is at this time that you need, if you don't know this, you need to get like some kind of a little cheat sheet like what I provided you if you're in one of my classes to be able to because all of these accounts here that are balance sheet accounts, you don't need them. And all of the accounts that are income statement accounts, you will need them. And just as a little bit of a refresher, all accounts are either income statement accounts or balance sheet accounts, okay, with the exception of dividends. And dividends are kind of on the balance sheet. We don't see them. They're a part of retained earnings. Okay, so in one way or another, all accounts are either income statement or balance sheet accounts. So what do you think about this first item here, fees earned? Another word for fees earned might be revenue or revenues. Okay, so revenues, I'll do it backwards. Let's see here, or fees earned, $165,000. Okay, and the reason is because revenues are an income statement account. Accounts receivable is a current asset on the balance sheet. We do not need this number. Equipment, get this out of the way. Oops. Equipment is a long-term asset on the balance sheet. Accounts payable is a current liability on the balance sheet. We do not need it. Salaries and wage expense. Anytime you see the word expense and it is not some type of a prepaid expense, it is an income statement account. So we're going to come down here and we're going to put a little expenses header here. And let's see here, I think, yeah. we're going to put salaries, I'm going to abbreviate, and wage expense, and that was how much? 40,000. Now you may notice that I wrote this expense over here to the left of where I wrote the 165,000 for the revenue. There's a reason for that, and we will get to that at some point, actually fairly soon. Okay, income taxes payable. Well, just like accounts payable, anytime you see the word payable, we have a liability. That means that income taxes payable will be over on the balance sheet, and we do not need that account. Cash, what do you think? Cash is a current asset on the balance sheet. We do not need that figure. Selling expenses, $44,000 expense, income statement. And what I'm going to do here, bear with me one second while I look at how I've got this lined up. I'm actually having to reach quite a ways to do this. Typically, what we do on this is we order our expenses from highest to lowest. That's why I went ahead and put selling expenses on top, and I didn't just write it underneath there. Okay. Let's see here. Common stock is part of the stockholders' equity section on the balance sheet. We do not need that number. Interest revenue of $3,000. What do you think? Okay. Well, for our purposes, we're going to do a very, very basic income statement. And so this is not necessarily the best way to do this, but it's the way that we're going to do it today because we're mostly trying to come up with net income. Okay, so $3,000 in interest revenue. Let's see, income taxes expense and then rent expense. These are both expenses, so they both belong on the income statement. I'm actually going to do rent expense next, right here, because it's a little bit more. Okay, and then I'm going to do, what was it? Income tax expense next, 18,000. And bear with me one moment. So let's add up all of these expenses. We have 44,000, 40,000, plus 20,000, plus 18,000 equals 122,000. Normally what we would do is we would, this would be our total expenses here. And I want to emphasize the way I'm doing this, I'm trying to show this to you more in terms of like regular addition and subtraction, not necessarily the greatest form in the world. We have, let's bring our calculator. So we have 122,000 in expenses, 168,000 in revenues, 165,000 plus 3,000 in interest revenue, minus the 122,000 equals 46,000. So what that means is our net income is $46,000. Okay. Given the nature of this class, you're not going to have to actually draw all of this stuff up necessarily to make an income statement, but you do need to be able to calculate net income. Okay, you do need to be able to do this from a set of facts, very similar to the one that you have in front of you. All right, let's finish this video up and we'll get another one started.